Bank of Canada delivers their jumbo 50 basis point rate cut. But it's not all roses and sunshines, unfortunately. This rate cut is actually more about what I'm calling damage control in the economy, and I'll be showing you why, with data, this 50 basis point rate cut is a game-changing move and how it's going to affect the real estate market in GTA. So make sure you stay tuned. Now, after watching this video and understanding a lot of the data that I'm providing you, and if you really want to know about what's happening with your unique situation, whether you're trying to buy, sell, or invest in the Toronto real estate market, you could do so by booking a call with me using a link that's on the screen that's right here. It's www.chatwithzen.com. Or the link is also in the description below. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, everybody. Welcome back to Prime Properties TO. If you're new here, welcome. My name is Zen, and I own and run a RE/MAX in the Greater Toronto area where we help a lot of clients buy, sell, and invest in real estate, on top of making awesome real estate content just like this one for you. So if you're enjoying the content I'm putting out there, do me a favor and like and subscribe. So the much anticipated 50 basis point rate cut that I would say everyone was waiting for / anticipating came this week. It was a big one for sure. And I think everybody in like the real estate industry and real estate adjacent industry was like kind of doing a secret happy dance somewhere on Wednesday when they first made this announcement. However, I'm going to be raining on the parade a little bit with, this video and why this 50 basis point rate cut is a little bit of a poo-poo announcement. Now, this 50 basis point rate cut, like I said in the beginning, is more of a damage control from my perspective. The economy is in really bad shape, like poo-poo bad shape. And let me show you the gravity of what a 50 basis point rate cut actually means. So you can see in this chart over here, in our history of tracking this, we've only got 50 basis point rate cuts in these events: the pandemic, the Great Financial Crisis, 9/11, and the Quebec referendum. Here's a chart showing you how much it happened each time in those four events that happened. And you can see that we got a double 50 basis point rate cut during the pandemic and the Great Financial Crisis. So, not great why we're getting one right now. And while market predictions have like a 40-ish% chance of a 50 basis point rate cut in December, I think it's almost baked in at this point, and I'm going to show you why with data later on.
Does this set the expectation for 50 basis points at the December meeting?
I think the short answer is yes. I think that the 50 in December is almost a given. We have to realize that the economy is slowing down. We are in a per capita recession. Inflation is behaving extremely well. The labor market is slowing. And remember, the neutral rate of interest, where you should be, not to accelerate the economy or slow it down, is about 2.5. We are much higher than that. So if you want to get to neutral, you have to go faster. And therefore, I think the next move will be also about 50 basis points.
Now, keep this in mind. I've always said that this year, if we have more than 3 rate cuts, we're going to be going into a real recession, not like even just per capita, like a real recession. And we got that 3 rate cuts back in September, and then we got sprung with this jumbo rate cut just now. So we're at a total of 125 basis points rate cut already. And I've always said that the inventory is the biggest driver of where the real estate market will go in the next 30 to 60 days, specifically the prices. And these interest rates that we're seeing right now, like this jumbo one, will likely take some time to affect the market. Now you can essentially see in this chart over here, which is a showing data, which is essentially buyer activity, that since the 3rd rate cut in September, showings have been progressively getting higher and higher each week on a year-over-year basis. So while this 50 basis point rate cut may not like immediately affect the real estate market, I think it's definitely going to have an effect on the real estate market in 2025 when some of this will trickle in, like the effects of the rate cut. And then when you combine that with the new mortgage stimulus rules we got coming as well on like December 15th and I think January 15th, yeah, I think the market will be a little bit better than where it is right now. Now, as for sales, the current number of sales is like crazy low in Ontario right now relative to population. And I've said in the past videos before that like we're at historic level of low sales or like 20-year low in sales. So it's really, really bad. And given that we have more rate cuts coming and that demand stimulus I've been saying, we should probably rebound from these low sales as you can see in this chart. So it means that things are going to go up in terms of sales, but it's not like it's going to be crazy, right? So I don't expect the market to start ripping like it once was as crazy as 2021, but we'll probably get close to what I would say like, the 10-year averages, which is closer to like the 2018, 2019 sales, like slowly and gradually in the next 18 months. So maybe looking at like 10 to 20% increase in sales in the next little bit, which doesn't mean that prices are going to go up rapidly. But like I said before, it's likely we've bottomed like as a market as a whole already. Remember, I said at the start of the year that there's going to be a splitting of the condo market and the freehold, a bifurcation, right? And it's going to be more apparent in 2025 from what I can see, where we're going to start seeing the freehold, like low-rise homes, start to ramp up in prices. And we're still going to see the condos, which are, having still a excess amount of inventory right now with room for prices to go down right now. Now here you can see the current expected Bank of Canada cutting path until the end of 2025 with the ending or what we call the terminal overnight rate at 2.5%, which will probably make like mortgage rates around 3.5% by the end of 2025 in December. Now in the same chart, you can see that the next expected rate cut in December is priced in at 25 basis points. And the reason why I would stray from that is I can see in this chart over here, the current inflation in Canada is 1.6. That highlighted yellow band is the target band for inflation, and being at 1.6 right now, we're already very, very low. And when you strip out the shelter component out of it, because it is a lagging indicator, because the rental data takes time for it to adjust in the CPI. And on that note, we just got the rental data coming down on a year-over-year basis for all of Canada, which takes time to filter into CPI basket. It's going to be lower and lower. And you can really see over here in this chart that like we're kind of at 0.6 when you strip out the shelter component. And then you factor into the fact that Canada is the only G7 nation that actually puts mortgage interest in their CPI basket. So if you really want to remove it, we're getting very, very close to basically deflation, which is what central bankers and economists fear more than inflation, right? So you're catching my drift. Like it's not great right now from what the data is showing. The economy is going down the pooper, like down the drain. And these rate cuts that we're getting is for damage control. And we're probably and looking likely to get another jumbo rate cut for damage control, right? Now, you can see over here, there's some more troubling data for the economy for you. And you can see that the construction payrolls are about to go negative, meaning job losses in the construction space, which makes up 8% of the workforce in Ontario, is about to get worse. Remember the last video I put out this week about 81% slump in condo sales? I can bet you a lot of construction jobs will be lost when you have that little sales, right? Now, the manufacturing is the other field that you can already see payrolls in negative territory in the last 2 months, which makes about like 11% of the workforce in Ontario. So you see what I mean? The combination of construction and manufacturing already comes close to 20% of the workforce. And that's going to be a big time job loss territory in the coming months. So be prepared for this recession. And you don't think the Bank of Canada sees this? Like, there's no way I'm seeing this first. And this is exactly what I mean by rate cuts are for damage control right now. I don't think we're sticking this soft landing, and I never really thought we would. I don't know why anyone thought they would. Everyone seems to talk about it, but it never happens. But based on the rhetoric, it seems more and more people are coming to this realization as well that we're not going to hit the soft landing. And you have to understand this. Just because there are rate cuts doesn't mean real estate prices will go up. A lot of demand is going to be stripped out of the real estate market when you have a recession, especially where a lot of people lose their jobs. And when people lose their jobs, they're not going to be looking to buy properties. However, at the same time, there are going to be some who won't be affected by the recession, like those who don't have a job loss or slowdown in revenue, and they could be capitalizing on those who are not feeling the effects of the recession. Just look at the pandemic, right? We had that K-shaped recovery between blue collar and white collar workers. And this is exactly why I'm saying we're in a very volatile time right now for the market. And while I think we've hit the bottom already because we have demand stimulus and rate cuts coming, I don't think it's going to be all sunshines and unicorns in the market in the near future. So you really have to look at, like, for your own situation, where your pain point is and how good your source of income is. And trust me, there's going to be lots of pain that's coming. And I know this for a fact because I have these calls. But at the same time, I have the same amount of calls for people who want to jump in the market who have a pretty secure job and they're looking at the opportunity to get back in right now. And this is what I mean by it really depends on what you are trying to do in the market and how you are with your job security or revenue or income security. And as I said before, the condo and the freehold market is behaving very differently. So depending on which part of the market you're trying to get in or out of, you make sure you have proper guidance, because on top of all of that, every single region or area in the GTA is behaving different from each other as well. So make sure you get proper guidance. And if you want to chat about your unique situation and what you plan to do in the near future for your real estate, you could do so by booking a call with me using the link that's on the screen right here. It's www.chatwithzen.com. The link's also in the description below. Until next time, your move, your future. See ya! Now that you're done watching this one, how about this one? Or this one? You know what? Just watch them both.